Welcome everyone to the Kindle Report. It is Sunday night, and this is going to be the final Sunday night broadcast. So the schedule is going to be changing. I'll go through a few details here before we get into the video tonight. So welcome, but I think it's going to be a lot better. We're going to start doing videos, and I'll announce the exact time by the end of the week. I'm still working on a schedule. But the plan is to be live probably 15 minutes pre-market, and then for probably an hour and 15, possibly an hour and a half, but I think an hour and 15 after that. So an hour and a half morning meeting every day while the markets are live. And so the only thing that's going to go away, and we're working on getting the Discord set up, so like the numbers that come out every night in the database can be in there. We're working on a bunch of details. So there's going to be public setup for Discord, and there's a lot of other things that are going to be changing as we go forward. And like I said, it'll probably be 10. That'll be 9. Let's see, 9:15. So it won't be. The clocks are going to change, so it'll be 9:15 Eastern until probably 10:30. So I'll update that. The plan is also to expand coverage, and there's going to be days I'm going to actually probably be integrating stocks and activity in the stocks and a whole bunch of stuff. So I think it's going to be interesting. I'm finishing up the schedule right now. So I told you I'd make some more announcements as we get into it. So I think that, yeah, hey, I am looking snazzy. I saw that comment. Was working on some other videos, just stayed in this gear. But anyway, it's going to get, I think, really good. Planning on actually having one of the shows during the week where I'm probably going to have a guest on or somebody to talk about some markets that I'm following. So hopefully it'll get very interesting. I've got a few people lined up to come on the show, so it'll just grow as we go. The good and bad is, and since I'm in the middle of announcements, I do take off the final 2 weeks of the year, and hopefully this week we'll have this year we'll have a little better configuration, and I'll have better access to the internet while I'm gone, and maybe there'll be some more Twitter activity or something. I'll figure that out. But so we'll go on this new schedule for roughly a month, and then there'll be a break, and then we'll start off 2023, if you can believe that number. Say that out loud 3 times. That's pretty amazing. But anyway, so that's the announcements for tonight. So let's get into tonight's video. There is a ton to talk about, and I'm going to try to get through this as fast as I can. And there's stacks and stacks of earnings. We've got the Fed, we've got unemployment, we got everything's big this week. This is just a giant week. So we're going to get lots of volatility, to say the least. Not like we already haven't had a lot of volatility. Just kind of a look back on last week. We're really seeing the market actually come in about at the just notice the sound is probably a little light. Let me fix this up just for a minute for you. Just bear with me, and we'll get that up to speed here. Maybe get a little better volume. That should be better now. Thanks for that. But yeah, so we're going to see just a complete dump on the market this week. And I think that the title of this video was, Will the Fed Be Dovish? I think the forward-looking elements might be perceived as being dovish. And I'll go through the Fed here in a minute, but everything that we're seeing, Friday's rally was insane, right? I told you I mentioned these numbers, and they'll happen. And the number I mentioned on Friday was 3906. I also told you there's going to be an upward bias on Friday. Did I think it'd be like that? Not at all. That wasn't the case. Unfortunately, I wasn't around to really watch a bunch of any of the action. I was out of town all day, so it was kind of a pain. I was feeling very lost when I got home that night. I did do a little Twitter space to talk to some of you, so hopefully you appreciated that if you follow me on Twitter. It's only about a half hour, just brief conversation. But this week is jam-packed, as I was saying, and boy, it's going to be really good. I wish I was starting the live during this week, because there's going to be plenty to be tracking real time, but that'll start on next Monday. I think the date is, let me get you a date there on that, is going to be the 7th of November will be when the new time starts on the show. So I know a lot of you that, especially my European folks, are going to miss that, because they have a little setup to help them with the overnight action and stuff. But I'm consolidating my day for purpose. I have some new obligations coming in that I need to be here in the market. So anyway, I think we're going to grow together and learn some new things. I think it'll be fun. So back to what's going on here. But the S&P, like I said, was up 4% last week. NASDAQ up 2.2%. And that was amazing recovery for the NASDAQ after all the crud that hit that with Amazon and Microsoft, you name it, Google. It goes on and on. The list goes on and on. Russell was up 6.0%. I'll talk a little bit when I go through the Russell about what I think is going on there. I think there's some significant things going on. We did see a backtrack of the 10-year all the way down to 392, which was just amazing, to say the least. I think it'll stabilize now. I don't see the climb happening, a resumption of big upside on the 10-year, but we'll see what happens over the next couple of days, and I'll be covering that every night. Anyway, let's look at the economic schedule. Then I'll spend a few minutes talking about the Fed and what I think is going to be setting up there. There's a ton of stuff going on, and I'm not going to go through the earnings reports. I'm going to cover that very quickly. All I'm going to tell you is there is 1,622 earnings reports coming out this week, and there's a lot of stuff. It is the core of the economy. Last week we got all the big guys out, all the trillion plus. Well, some of them that used to be a trillion, but most of the stuff that we saw last week were like big major players. This is the core stuff that's coming out this week. There's a lot of significant information that's going to have to be absorbed. And while that's happening, we have the Fed coming out and doing the FOMC meeting started on Tuesday. And, it's just a barrage, folks. So, depending on what happens, I'm going to try to set up, because what I've been doing the last different Fed meetings, the Fed meetings and that time slot typically it conflicts with the live trading room. So last month I did a live, I took some of the elements of the live room and we brought them into there and we covered what's going on with the Fed real time. Probably going to do the same thing. I will announce that Tuesday night when we get to that point, exactly what the schedule will be for Wednesday. So digging more into these economic reports, Monday we've got Chicago PMI, we've got Dallas Fed. All of these numbers are looking to go into possibly contraction mode. Tuesday, ISM manufacturing construction spending, that's expected to be down 0.06. Anything to do with building anything right now is pretty much under pressure at the moment. We have JOLTS coming out. It's at 10 million. On Wednesday, we got ADP expected 200. That's probably not going to be a significant number. And then that's the big day, right? We get the FOMC release. It's expected to be 3.75 to 4%, which is a 0.75 increase from where they are right now. And probably everybody's going to try to figure out what they're hinting for the December meeting, whether it's going to be a 0.5 or 0.25, all those type of things. And as I've been saying, and I'll go through more detail here. Matter of fact, I'll just go into that right now because this is the appropriate time, is the Fed has been, I think there's the consortium of all the players, the Bank of England, Bank of Canada, Bank of Japan, all of these major players, the EU, are all coordinating, and they're doing things that I think they're leading the Fed. They're trying to not overshadow the Fed, but try to change sentiment through these other banks. And I think that so the Fed can continue to get this inflation situation under control. I think that's the plan. Obviously, I don't know. It's speculation. But what I think is going on here is that they're using these other banks to change market sentiment. And we saw really that effect happen ever since the pension issue in the UK and the BOE basically monetizing their own pension, which was interesting. That should be a video in itself. I'm sure somebody else has already done that, has much more knowledge and focus on that. But the point is that all of this has been orchestrated. You can bet that before every one of those meetings, decisions, things that happen leading into this week's Fed have all been coordinated. There's nothing's been by accident. Everybody knows what everybody's doing, and it's definitely, we won't call it any kind of conspiracy or anything, but we're definitely going to call it a coordinated effort. And so the Fed's it's going to be interesting. I think Powell's message and question when he does this conference call will be interesting on Wednesday. As far as market participants go, I would think you would be not very smart to play any heavy bets prior to this coming out. And I think that everybody's going to be playing it pretty close to the chest as far as anything goes in these markets, whether I think we'll have decent volatility, mainly because we've got all this other news coming out. So there'll be a reaction to it, but then it's going to recenter itself. And you'll see when I go through the technicals here in a few minutes, there's definitely some bias where we're looking like we're peaking out here And it's been, I think, incredibly interesting, because going back 12 sessions ago is when the algos were telling us that we're going to get a big rally, and all the bears were telling me on the channel that's not going to happen. In fact, on Friday, all the bears were on Thursday night stream that I did, they were all telling all of us bullish people good luck tomorrow. And I think they were the ones that needed the luck as it goes. And I, so we'll get into all those details here in just a minute. Yeah, I'm just looking at my notes to make sure I've covered everything. I think I have. So let's go ahead. We'll get into the database. We'll get right into the crux of the technicals here. I brought up the daily to start. I'm going to tell you what happened with, I told you on Thursday night I had very, very little expectations for the intermediate database picking up any traction, and that was pretty accurate. So I'll go through several things here, and we'll basically set up what's going on the short term versus the intermediate. Intermediate uptick just slightly, up from 17.5 to 18.32 bullish. The numbers are right here on the screen on as far as what was out there, but there were 858 buys, 312 sells. So there was a net positive there, but nothing material. You guys know the numbers by now that are if you follow this channel on a regular basis. 22% on the database is minimum to at least start to show that we have a serious bottom going on, and this is on the intermediate basis. And the way this whole thing works is that we go from the short term getting traction first, because the patterns will be picked up early, and then that short-term database leads us to a traction in the intermediate. So let's go to the short-term that's on the screen right now. It is uptick to 40.64 bullish. We had 850 buys, 110 sells. So in spite of this monster rally that we saw, really, as I've been talking for a number of days, is that we're kind of in this broad trading range in the market. So the database is starting to reflect that as well. So as we go through this week into the following week, I mean, like I said, we've got probably one of the biggest weeks in front of us that we're going to have for a while. This is very climactic as we come in really to the 1st of November, is that we're going to have all these earnings reports out. What did I say? 1,622 earnings. We've got all these major economic reports coming out, unemployment coming out on Friday. I actually failed to mention that, but I'll mention it right now, is that unemployment is, looking to be unchanged, and the jobs there are looking at, I believe, I'm trying to find my notes here. Yeah, 242 on jobs. The same thing is expected as far as the ADP is around 250. So that seems to be the number every month that happens here. And I won't zoom in on this, but right now on a short-term basis, all 12 sectors are long, especially since the tech has been lagging on a short-term. It is a buy for tomorrow, so everything's long, and we've got traction here. Most of the stuff that's there, the longest signal that's out there right now looks like it is conglomerates. I think energy is second. Energy's up 10.64 in 19 trading days. So those of you who have Wavetech, you can break this down, but you can see that we have pretty good traction across the board on the sectors right now. On the intermediate, I'll flop the intermediate base up, just talk about it here in a minute. This is pretty significant because we're at the end of the month. Tomorrow, Monday, is going to be the final trading day for the month of October. So maybe there'll be some squaring up of positions. There's going to be a lot of cross currents this week, folks. Just expect lots of volatility, and I think it'll be a good trading week. But it's going to be pretty tough trying to figure out what's going to happen next for the month of November and into year end. And when I go through the technicals tonight, I am going to bring up a quarterly and some longer term thoughts as well. So probably going to take us a little bit to get through here. Only good thing for me, I got a big juicy steak waiting at home to finish my day off today. So anyway, but all of these metrics that are coming out right now on a daily database, 42%. We get above that in the next couple of days. We get a potential to actually get that number to flow over to the intermediate and start to get some traction on that. And maybe, I'm going to leave it as a maybe, start to get something that forms more like a year-end rally, which is somewhat typical, right? Started in October, and now we're coming into November, and all of these numbers. I mean, I made the comment when we started this earnings season that earnings have been projected to be so bad it must be bullish, and so far it's been that case. There has been plenty of disasters, but even like Amazon was down 25% the other night and came back. It actually got a reversal off of the lows for the week. So that was encouraging, I think, just that there folks who are looking at maybe bargain prices, and the buy the dippers have showed up and all that stuff. And you don't hear quite the level of bearish talk out there. It's still there. Everybody's, when is this bear market's rally going to end and all that. I'm going to show you a couple metrics here when we get into the longer term in just a couple minutes here, that there's maybe more of the configuration is suggesting there's more, not necessarily a rally but a positive, and this sideways trading range I've been talking about could set up for multiple months, taking us into 2023 and sometime in the first quarter. But the database, from an intermediate standpoint, I know it's kind of small on your screen, but I'm just going to bring that up real quick. It's at 18.32, but what I want to show you is there is 0 sectors long, and not one of them. Groups, there are 24 groups out of 110, but there is 102, sorry, but no sector. I looked at this and it looked like everything was negative. There is the services sector that is long, and that entry date was on August 1st. It's still on there, but it's underwater by not a lot. It's basically flat. It's been in there for 64 days. So, but other than that, we're not getting traction. We need the traction in the sectors. We need the database to get, move up 22, 28%. All these metrics flow through, and it's very methodical, and it takes time for this to happen. So I'm just, what's setting up here is the potential for the final year-end rally, and that just seems to be what's setting up here, looking at the database. And I'll be more convinced of that when this database here, which is at 18.32%, gets over 22. And of course, 42 we would be having not a major rally, but we'd have an extended rally. I'm not sure we get there, folks. I'm not convinced yet that there's any kind of major bottom here yet, but there's definitely things going on. We've got elections next week, by the way. We've got a ton of stuff that's going to hit this market and change sentiment. And I'm not going to make any bets that if the Republicans take over, that's good, bad. I have no idea. I don't know that sentiment and what we saw last week, that there's short covering ahead of this. Who knows? It's anybody's guess. I'm not going to claim I understand all those movements coming out. I'm going to stick to the quant information that I get. I'm going to stick to the technicals and try to see what we can come out of that. But as far as figuring out any of that stuff, if someone says they figured it out, they're just not necessarily lying. They're just guessing. And I'm not willing to guess on that. It's not important. What is important is the configuration, how the database is starting to act, the things I'm seeing there, and how that can walk forward into something more significant. Okay, folks, now for the fun stuff. We'll cover the S&P. And the S&P is slightly negative right now, but I want to review some things that has happened. And we released these new PPMs with an algo in there, an auto regression math that goes in and does some predictive forecasting of what might happen, right? So if I went back and I ran the script here back to this reversal day, I remember way back as when we got this STX, this fifth STX buy, that is where we were seeing these algos suggesting higher prices. It was suggesting prices for a fair amount of days, 12, 15 days in advance. The reversal that we had on the 13th of October was the beginning of all this. And then on the next thing that we got was the Fib projection tool started to throw out some numbers on the 19th of October that we were going to go through a couple of different levels, 37.50, 38.45, 39.03. I remember telling you about those numbers. We managed to get to 3 days ago. We printed up to 38.97. We had that down day. We traded down into the moving averages. I told you this would be a really good point to be looking. Anything around 37.90 to 37.85. We actually printed, when the Amazon news came out, we printed down to, I believe, 57.50 was the low print. And that was pretty substantial. And I remember we kind of ran the live trading room over till that news came out. And I was telling everybody, this is an absolute bargain to get a hold of this price. This was coming into, of course, to Friday morning. And as Friday morning started, we'd already got back over 38 handle. And you folks that watched what happened on Friday know what went on there. Now let's go to the algos here. And what are they telling us now? And this is important. They are telling us that the upward momentum is going to dissipate. You see the projection for the indicators is that they're going down, and they're ultimately projected at the moment. Doesn't mean they will, because these things will update as the real-time data comes each day and there's more input. But basically, it is suggesting we're going to get through the first and second derivative, and that the 10-period moving average is actually going to roll over and go negative again. So those of you that are bearish, I believe you're probably going to get some of this. It's going to take, right now, the projection is 3 or 4 days out, which maps with what? The Fed meeting, right? So there's some pretty decent stuff that is setting up here. But the PPMs are still projecting that there's going to be trend mode on the 10-period moving average. Now, 10-period right now, 38.03. It's going up about 20, just rough numbers, 20 handles per day. We look at the market grid for today. The R2 number is 39.66. R1 is 38.84. I'm going to push that we've already traded right now to 39.14. So we're probably going to try to get up to that R2 number, but I don't know that we're going to get there at all. But it's within the volatility expectations right now. And so the support will be around the 10 at 03. We look at the market grid, 38, get these numbers right, 38.84 is S1, 38.55 is S2. So possibly an R2 S1 number would be fairly appropriate, and we basically came close to S1. So we're going to, basically my expectation is we'll expand this range. I'm going to show you, I'm going to go, before we go into the long term, I'm going to bring up the hourly chart here, and show you what the algos are suggesting here. So the algos are suggesting on the hourly chart, so for the coming into tomorrow's opening, that we're probably going to drift down toward this 21 period moving average. So S1 is probably, it should drift lower overnight, and we get over. There's a couple really critical numbers out there that are coming up on the hourly chart, 38.35, and I think that's pretty close to S2. If we got below that, there's actually Fibonacci projections on the hourly chart to go back to the 200-day, which would, not 200-day, 200-hour, which is at 37.84. I don't think we get anywhere close. In fact, I think the worst that we could get to is 38.39. I'm going to click back to the daily just for a minute to get those S numbers. Yeah, 38.55 S2, S3 would be 38.26. That would be the extreme. And so expect plenty of volatility. But like I said, the algos are all indicating that over the next several hours, it's what, we're probably almost 10 hours to the U.S. Open, that we should drift down to there. Don't know what they're telling us after that. We're just projecting out 10 bars in the future right now. And typically about 3 to 5 of them looking forward are pretty valid. It's very accurate. And I love what somebody said on Twitter, that the new update on indicators are like PPMs with the crystal ball. So it is quite intuitive, and for especially with somebody like myself that A, developed them, and B, have been following them for the better part of 40 years. I know what when these expectations. This is what I always did, was have these expectations here from the standpoint of what it might look like. Now these algos are giving us some insight into that, and they've really been leading pretty positive. So but let's go, and now let's click out and let's start to go through the longer spectrum of things here. So I'm going to flip. Matter of fact, before I do that, let's just bring the weekly. So I'm going to cover, as I always do, focus on the S&P, and I'll relate to the other indices and how they fit in this pattern and if they have similar configurations. But as we look at the let's go to the weekly, and we look at that chart. We're sitting right on some of this major resistance. Now PPM2 was negative, and the algos were predicting it was going to be really strong. So just if you recall, and you could go back and watch last week's video, the algos were almost straight up predicting that we're going to get this incredibly strong rally out of here. All of a sudden, that after we've gotten tonight's beginning values, there is some slight bias to the upside, but nothing drastic. So the 10-week moving average 38.04 is going to end up to be a reasonable support. The 200-week moving average is going to be significant as well, 37.06. I don't think we see that, but that's going to be major support at these levels. On the upside, if we just look at the market grid here, you're looking at the for this week, R1 is, one second here, there's a value missing. 1 second. Let me see if I can fix something here real quick. Bear with me 1 second, because I for one reason or another, there is, yeah, this is not missing. Now it's there. So R1 is 39.58. So that would be probably the extreme for the week. The next level is 40.12. So it won't take much for us to print above that level. And if that were to happen, then that's probably going to be a big rejection point. Anywhere around high 39 handle, for a little bit over the 40 handle would be, I would think would be a top. So this is the weekly. Let's stretch this out, and let's go to the next level, and let's start to look at the monthly. And also look at what the algos are telling us on the monthly. The monthly is telling us that we're going, it's very, on PPM1 right now is a negative 2.06. This is a major downtrend. That value right now is at 4104. So any print anywhere near that is going to get rejected and probably see a big reversal off of that pattern. But I don't think we get to that level. We are going to get a new value tomorrow night, and just to estimate what it might look like right now is it looks like 90 handles lower as we come into the month of November. So the value right now of 4104 all of a sudden is going to be right at where I was just talking, around 4020, 4010, something like that. That's going to be a major resistance point for the month of November. But it is, the algos are suggesting that is going to possibly get a little better, where we flatten out, but we're still going to be negative PPM. So that downward pressure is going to be very evident around the, we'll just call it the 4,000 handle. I'll be covering that. We get anywhere near that, remembering to set these numbers up and how they're likely to play out here. But this is what it looks like to me, is where the major resistance is going to be somewhere between 3,900 and 4,000. And we've already, like I said, everything seems to be set up here. I actually do not have expectations for the Fed to trigger anything that would signal this big melt up rally. There's still a lot of pressure here. Next, what we're going, let's go ahead and I'll spin back out here to full screen, and let's go to the next level, and let's take a look at the quarterly chart. So this is the quarter. Now we're in the middle of the quarter. We just finished, we're about to finish tomorrow, the first quarter of this final quarter of the year. And one of the things that's interesting here is that the PPM1 is still up. It's at trend mode, a plus 2.02, but the algos are suggesting that it's going to start to burn off probably in the next, roughly next 3 months. It's going to take like 3 or 4 months for it to burn off and start to turn down. But I think what that means is that we probably stay below this quarterly moving average here. And let me just bring that up, see if I can get that value for you here. Right now, the quarterly 10, I'm just trying to, I won't adjust, sorry. It's in a percent mode. But anyway, the 10 is, there we go. The 10 is right now at 38.12. So that is pretty much where we're trading right at right now. Then the next level would be for a value. They keep moving on me on this scale over here. Sorry. Yeah, they're looking like between right now 38.15. This is cash, so it's not updating. So as soon as we get an update, there's going to be plenty of resistance right here on the quarter coming into year end. But the algos are suggesting that the downward momentum is going to increase. Otherwise, and right now, since they're positive, it's going to lose the upward momentum, which should ultimately just keep the market in a sideways range. I'm expecting, and I'll bring this up tomorrow night. I think we'll have, we won't have this until Tuesday night's video, where we get the update on the quarterly. I don't know if it's going to turn up on this next value or not, but I don't think it will. It may flatten out just a little bit. But this is, so far we came down to the 21 period moving average, and we bounced basically off of that level. And, you know, we're just basically continuing this sideways range here. So I think we get a crazy sideways trading range, and this thing lasts for maybe into mid 2023, maybe even the third quarter, where we aren't going to see any big rallies, possibly not even a big sell-off, because there is some upward bias in some of these averages, and I think it's going to take. This is a quarterly bar, right? So each bar is 3 months. So this is going to be slow motion markets. So it's going to hold a lot of these levels and have support around these levels, and they're pretty significant. So like I said, right now they're broad though. The ranges are very broad from the standpoint of what's likely to come on. So I will take a quick look at the market grid here. Is right now R3 on the quarterly is 39.78, and what's the 41.60 is RTX on the quarterly. So those are pretty much in the range of what I was just talking about at 30. We'll call it 4,000 to 41. That's going to be your top end. There's so many numbers lining up there that this is really setting. That will be the next point if you're looking to really get short and trade that. There'll be some short-term stuff, but that should be a pretty major segment there, and it could set up a major right shoulder in this market and maybe start to signify that we're coming to the bottom end of the market grid, which right now, those are crazy numbers, 2780, 2606. That's R3 and STX in this market. So don't see that happening. I think we get a consolidation. I'll just be updating this. But overall, the market appears to be broken. And I will dig into this before I take a break at the end of the year, what the expectations will be for coming into first quarter of next year and what we're likely to see. I still think if you were looking for a matrix of the markets, you'd probably do 73, 74. And I think all this inflation and all these other things that we're dealing with are going to stay around. Okay, finally ready to move on to the NASDAQ. The rest of tonight's presentation should go fairly quick. Like I said, I will let you know if the other indexes are not actually looking or confirming the same thing that I just went through in a lot of details on the S&P. Yeah, some interesting things coming out on the NASDAQ that are not there on the S&P. And the first thing that just pops out is that we have some downward fib projections now, 10,489 and 10,000, we'll just call it 10,000 even, is some downward fib targets that are coming in. For the most part, we still have that upward sloping PPM1. It's not nearly as strong as it is on the S&P, but it is this similar type configuration. And the algos are suggesting different action, down for a couple of days and then stabilize. And that still goes in line with trading down, potentially holding on the S&P, the 10-day. It looks to me they're pretty much in sync. And I don't think with these upward slope yet in the PPMs to worry much about this fib projection to the downside. I don't think they'll be hit. When we hit these fib targets over here, which were pretty accurate, we actually had downward and negative PPMs at that time, and we have a positive PPM1 here. PPM2 is almost at trend mode, and this is the daily NASDAQ. I just bounce over to the weekly chart. We won't go through the full spectrum like I did here, but weekly charts, we're trading above the 10-week moving average. 11,554 is that number, and it has some downward targets as well, but PPMs, at least on a weekly basis, continue to be somewhat positive, and it's actually telling you that the 10-period moving average is going to turn up. So the only thing that will make that happen, I've talked to you folks about this before, is that the market value needs to stay above the 11,546. It's still it's flattening out here, so we're likely to see that right at that number. That's going to be your support. Last is 11,555. So we're just above that level, and I suspect we'll continue to hover around there and really trade in this sideways range. Next, we'll cover RTY, the Russell 2000. And I think this is like super interesting. I've been talking about this, and I told you in the opening comments that I would discuss why I think this is happening. But what we're seeing here is that we're getting upside objectives here. The algos are still suggesting that the 10 is going to turn up and that this market's going to go higher. We're trading basically right at the 200-day moving average. And I'm sorry, this is weekly, by the way, 200-week moving average. And it looks like we're going to see some improvement and possibly get above the 1869 level. We're trading 37 as we speak. Let me back up and just go to the daily here and just get this set up. The daily has same pattern where basically, and on the weekly, that would be 2 to 3 weeks out. Right now on the daily, we're looking at sideways to down. PPMs look very similar to the configuration that was on the S&P, but the exception is it's still going to be positive for at least 2 to 3 more sessions, where this white line that's in here, let me blow that up just a little bit so you can see it, that upward slope on the 10-period moving average across the board on all of these indices is going to be your major support. So watch that. Just simple 10 SMA is all you're going to need to understand. Should be able to trade off of that as long as the PPMs stay positive, and 2-3 days out they're still projecting into trend mode, so that should be your good support from that standpoint. Next, we'll cover the 10-year, and I think this is interesting here, especially I've got the models up here, and the model going back here, it first got a buy signal at 2.72 yield. This is on a daily, and it stayed long this entire sequence, and it just now exited on Friday's close. So it has no position, so it's not saying yields are likely to go into a sideways mode. You can look at the PPMs, all of that. I'll go over and we'll look at the algos here in a minute. But one of the things that I've been talking quite a bit about is these Fibonacci numbers that are above this market, and that's still 503, 505 on the upside, and that's still a thing. Even though we're seeing some flattening here, we're likely to see some consolidation. Let's go over and just take a quick look at the 10-year here and look at the algos. Algos are suggesting some stability and then turning back up again, and I would most likely argue that the 40 is going to be the extreme, and that's a crazy number. I talked to you folks about this the other night, 375. I didn't think we'd even get to the 392 level, and we did print that. Let's go to a weekly algos and just see what they're looking at. Yeah, the weeklies are also suggesting that these markets are going to start into a consolidation here. Even though you see the algos, these dotted lines and everything over on the far right here where my cursor is moving, that is just suggesting that the upward momentum is going to be lost, which would put us toward this 10-period moving average. It's at 360, and this market's not open, so let me just see what that's moving at. Yeah, 366, so it's going to be 376 for this week on the weekly number. So all of a sudden in the following week, it's going to be 386. So we should see some stability, at least around this 10-period moving average. That should be the absolute bottom. But the algos are suggesting that we're losing upward momentum, but we're not going to turn negative just yet. So that 10-period moving average should be a very reasonable expectation to hold. And that's quite a ways down. Like I said, it's right now 366 and when the market opens tomorrow, the calculation will put it around 376. And we did print down, 392 on Friday. So everything looks like it's stable. There's still an uptrend in the yields. We're just likely to go maybe into a sideways range here and stay within the market grid expectations as we go forward. I'll update this tomorrow night once we get some live numbers to look at. The last time I looked at the overnight markets on the 10-year, I'm just looking at them real quick right now. We're back at 404, and so that is a bit of a rebound from there. So we'll just continue to expect this trading range here on as far as that goes. Looking at the market grid, upper range probably 413, 429 would be an extreme. But I think we consolidate here. We stay high, and especially into the Fed. Nobody's, I think, going to make any big bets coming into that. Next, we'll cover crude oil. Crude oil has got these upward projections that I've been talking about for several days. We're looking at right now for, that's funny, this is Colgate, I'm sorry. I hit CL and then enter, and that brings up Colgate. So now we have the right numbers. These are numbers I was talking about here, is that the 98, 105, 109 on the upside. The 10-period moving average, the algos are suggesting that this has the potential of rolling over. These downward projections we printed a number of weeks ago near this level. We got down to the 82 level. Right now, fib target 1, this is the daily. So fib target 1 right now is 79, 70, 74, and 71. I rounded off these numbers. That's these extreme levels here. Last couple of times we got close to the fib target 1. We didn't penetrate it. That's been kind of the thing going all the way back across this chart. We've traded into those range. Upside min target, fib target 1 on the upside is basically the 200-day moving average, which is up here around 98.90 in that range. Let's take a quick look at the weekly. Weekly also has some big objectives to the upside. We're looking at fib target 1, 107, 118, 126. The algos are suggesting stability and keeping this trend up. So it's going to take us to get back above the 10-period moving average, which right now is 85.63. We're trading at the 87.49 level. So as long as we can stay above that, we should see this continuation of the PPMs turning up and the moving average turning up and suggesting that it is suggesting that we're going to get into trend level, and this is a weekly chart. So there is the potential here for a pretty big move to the upside in crude, just hitting the 40-period moving average, which is at 98.60, which goes to that daily projection I just showed you, and then the weeklies are 106, 107 on the upside. Next, we'll cover gold, and gold continues just to kind of trade in this sideways range. This, let me go over to daily first here, and as I've been talking about this pattern that's setting up here, daily still got some downward pressure. This red dots down here is a pretty is the fib target 1. We got down to that. That target is 1614. We printed 1621, so we came down to that. I've been talking about as long as we hold 1621, 22, we're going to have to start to get some closes above 1650 on a daily basis to start to move this up. The algos are suggesting that that is exactly what's going to happen. In fact, that PPM1 is going to get into trend mode. And then we do have some fib targets to the upside. Fib target 1 to the upside, 1737, 1782, 1809. And these levels are putting us up toward the 200-day moving average. I'm going to go over to the weekly. Is there some the pattern I've been talking to you about on a weekly also is starting to project that we've got some potential upside. Now the PPM, it looks like another 2 or 3 weeks. If we can hold 22, we can hold into this range on the Fibonacci. There's even a weekly target down here at 1620. That's basically where we went. We went to 21. And so, but this downward pressure is still pretty substantial. PPM1 is at a minus 0.61. So that's going to represent pretty much a ceiling at 1676. So we're lucky we get in a range of 40 to, we'll call it 40 to 70, 1640 to 70 on the upside. So far, the low has been 43. Maybe we can print into a 30 handle, but the best thing that could happen for gold this week is just to kind of stay in this range and consolidate some more. It's going to take at least another 3 weeks to get this position ready to roll to the upside. It does look like it wants to ultimately get into an uptrend. Final market we'll take a look at is Bitcoin. Once again, continues to do really good. I guess Elon getting Twitter and Dogecoin has been really strong, and all of a sudden everybody's like, oh, the cryptos are waking up. So what have I been talking about for the last probably 2 months is that we've been defying gravity, but the PPMs now are starting to turn up. This is the weekly chart. They're finally starting to get positive. They're actually, PPM1 is at a plus 0.47, trend mode up. PPM2 is still negative. So we're trying to trade above that number right now. 2737, last trade 24,468. So we're trading right around that number. And I think ultimately we're going to end up trading back to the 200-week average possibility of getting up into this 40-week handle. I just want to go back to the daily, and we'll finish here, is that the daily pattern is interesting in that it's setting up this bubble. The algos are suggesting that we're going to see some downside, so we're going to probably come back into this range. I think there's just more consolidation before this market's ready to go. But overall, the way that the weekly is setting up, it is suggesting that we're getting an intermediate bottom and a potential intermediate uptrend to form. The dailies are suggesting that we're going to see a rollover probably back into 19.6, something like that. So expect more consolidation from that standpoint. And maybe what we just had was one of the 1, 2, 3 swings that I talk about in the trading room that you folks that have been in there know about. So this is basically algos are telling us that we're going to see a flattening of this trend and probably coming back into these moving averages, which are right now at the 1957 level, 19,672, 19,557. That's basically where we're heading. Okay, folks, that's going to do it for tonight. Thanks for being part of this channel. Sorry I got a little late. We had a lot to go over, so it's going to be one heck of a week. And like I said, I'll let you know Tuesday night whether we're going to do a live stream, real-time live stream with the Fed coming out, and I will let you know all about that. Yeah, so I see somebody, Simon, was talking about what the algos are suggesting on Tesla. Folks, I'm telling you, when I finish this screen, I'll have the link there to get these indicators. Get them, come into the live room. Those of you in the live room, I'll see you tomorrow at 1 p.m. Eastern time. And we have a lot of fun in there, a lot of education, a lot of things go on. Nice thing, it's a private room, so we don't have to worry about we'll just say we don't have to worry about what's going on in the internet there. So thanks again, everyone. I appreciate it. I do look pretty snazzy tonight. I'll have to say that. But anyway, have a great evening. Good day trading. If you're watching this stuff, you're trading in Europe, watch closely. We're seeing the potential of the markets rolling just a little bit, but I think that there's going to be some nice trading opportunities over the next several days. Tons of stuff coming out, as I mentioned. Have a great evening, folks. Good day trading. We'll see you tomorrow night, same time.